Hello guys and girls, and welcome back here on the ChainLog YouTube channel. And today we are gonna talk about a lot of things. Sorry if I am a little bit down today because I had I hurt my neck, and when I was doing workout, so I have a little bit of stretchy neck today. But anyway, we are going to talk, sorry for that, but we are going to talk about a lot Bitcoin and Ethereum as well, because as you see right here I have the t-shirt of Ethereum, just because the fact that we are going to have this merge that's going to happen real soon, a matter of a month or so, 15th 16th of September seems like, but it all depends on how it will go anyway on the main net and on the test net as well. As of right now, we're still not having that much of a problem on the test net, so everything seems to go alright. We'll see if anything's happened, and we're going to talk more about the state of the market, of the crypto market, and where we are now in comparison to the others bear markets, and also where we should go and how far we can go lower or higher in the next few weeks or months. Every 2 or 3 weeks I give this kind of let's not talk about advice, because I wanna be clear here for my viewers also. This is not a video about financial advices, so if you are broken or if your portfolio does not perform well, I'm not the one that will help you out here. I'm just trying to be a good educational YouTuber. So this video is educational content and maybe entertainment also, to make you know about what I know about the markets and where we are today. And we are going through that today. Meanwhile we wait a little bit. Let's get into just a little bit on what I saw back the last week. So I'm not going through all of that. I'm gonna push through very fast just to make you an idea of what's going on. So last week, and this is my Onchain technical and economic macroeconomic analysis that I do every week on Twitter. This week I started this this analysis with the title "I see the end of the bear market rally." And it was actually the 16th of August, and 16th of August we were essentially right here. Okay, so let's get out all the noise I have here with all my indicators and MAs. So 16th of August we were back here, and I said I saw the end of the bear market rally, and that was actually what happened. We got flashed out with longs. Actually there was like 200 million longs squeeze in this day alone. This was 19th of August. And not only that, I explained that the difference that from a bear market between a bear market and a rally and bull markets, start of the bull markets. And actually I didn't see, and I used my confluence metrics to make you know that I didn't see with aSOPR, with the address bands realized price, with the STH realized price, and so on, that I used also and I used the TA as well, the 200 DMA or the SMA, with the pattern price action, and all of that put me into a situation where, well, I saw that there wasn't the confluence needed to start a bull market. That wasn't there. Okay, so CPI also went out last week. We got 8.5%. There was a drawdown in momentum that we were at actually month over month 1.3%, and we got through 0%. So a lot of momentum was teased to the upside, and we got a little bit below the actual expectation. The forecast was 8.7%, and we got to 8.5%. So at the end of this video, we're going through what the Fed will do, but I already said in my analysis that we are not going to see the Fed pivot in an instant. We are going to see the Fed pivot in a long time horizon, slowly, with all of the macroeconomic and global problems unrolling out. And we'll see how there goes, because it's not the inflation. The inflation right now is not a problem of the Fed itself. It's also a macro problem with supply chain issues, where the supply side of things is actually taking inflation down. It's not the demand side. The demand is the problem for the Fed, because a high demand with a low supply, or a steady demand with a lowering supply, is actually contributing to the inflation. And we have still a strong market, even if we have a lot of metrics that are actually saying to us that we are in a state of the market where we could see the labor market getting weaker in the next few months for the raising cost of capital, and all of that will mean that probably slowly but slowly the Fed will have to pivot. They always did, and this time is not anything new. The cycle is there, cycle of boom and bust, and we are actually in the bust cycle. The last part of the boom, where we have to experience a recession to keep down inflation, and recession keeps inflation down. That's like it is. Lower demand, lower supply. It's a recession, but they keep inflation down, and we'll get along also a little bit of economic indicators. This was the HIJ junk bonds ETF, and we were expecting not much of a rally. We did rally a little bit, and you see right here we did rally a little bit in the month, and this was a monthly chart, and as you see, we managed to get a little bit up, but it was just a rally. I think we were here when I posted this. I more thought about this kind of movements than the other ones, because every time we get above this junk bonds, high yield, corporate bonds, ETF, we are actually getting out of a bear market. But instead, this time wasn't there. As you see, we got some uptrend right here, but we fell back below again because the market wasn't ready, and I think we are still there, more or less. So let's talk about Bitcoin a little bit. Let me just control if there are any questions. No, perfect. So let's talk about this. Let's talk about the Bitcoin itself and the price action we have seen. So let's just get in the technical analysis side of things. Let me just yeah, it seems alright. Okay, so this is a daily chart, obviously, and I saw this bear flag. This bear flag is on the weekly chart also, as you see right here. and we broke below this week. And in 10 hours we are going to see if this will happen again, if we close right here. In this case, let's back in all my indicators so I can better explain you what's going on. On the weekly chart, we managed to break above the 200 SMA, that is these points, blue points right here. We did manage to break above it, use it as a support, and keep pushing higher. But we was just rejected by the 12 EMA, that is 2 weeks moving average more or less. And as you see right here, we use it as a resistance and we broke below the bear flag. Just common technical analysis thing. I was not expecting that to be the case if not for all the confluence I just explained to you. There was a lot of confluence for this downturn, and me and someone else on Twitter just managed to see those data. Data is the way. It's not that I am so good at this, so I knew all the things. Not that. The thing is that when we have like 8, 10, 12, 15 metrics that tells us that we are not ready, and we are taking in consideration also the macro environment, then if all confluence to a scenario, that scenario is going to be it's just that. It's not you take the FOMO and the food out of the way and you see the data as it is, and you see that confluence being put into the market and where it goes. So where we're going actually, we are actually at the same and below the Bollinger Bands. We broke below also in the daily chart the Bollinger Bands. So here the bands below here was actually using our support yesterday, the Bitcoin price, and today we are actually using our support to push higher, but I don't think we are getting far above of this. We'll see tomorrow when the market's open, but if the trends continue, and what I see right now is just the leveraging of people getting flushed out of the market, we should, if we watch only the pattern, we should at a great level to gain momentum to the upside. But I don't think so. In the near term, we have still to retest this RSI and the 30 RSI, and I don't see that much of a FOMO into Bitcoin, for example, or in any other space. I see a lot of traders that are waiting for the price to dip down below again so that they can buy in this zone right here. If you remember, 14th of June, actually, I was calling for the bottom being in. Okay, 14th of June. That was, as you see right here, this candle, and I said, well, if we are to dip down below, I think the bottom is in, and this is the area. The area was actually this huge demand area that goes from 13.8 to 19.9, and more or less 20k to 14k. Okay, and that's why, because if you see the monthly chart right here, that is the top of the last bear market, of the last bull market, and the very close of the monthly candles right here. So where we could go next? If we watch the monthly chart for Bitcoin, we did retest the 50 EMA, but we didn't, in fact, never test the 100 monthly EMA. The 100, that is this line right here, that today stands more or less at 14.5k. If we have to dip below and have this events where everyone is forced out of the market and the pain is huge for everyone, this is the huge demand area where we are going to, obviously, in my opinion, So it's not that I know everything, but in my opinion, there is all the confluence needed to, if we have to dip, we have to dip below 20k and above 14k. If we are going to retest the 14.5k where there is this 100 EMA, that is the bottom. I'm not saying that we are going to dip below that. I don't want that, because obviously my long-term holdings want to be to the upside, up and to the right, but we are still in a bear market. We are not seeing that much of a movement up in stocks, even if we had a little bit seen this rally being placed, as you see right here, for example, in the S&P's. We have seen the S&P's rally until last few days, where we reached the 200 SMA on the daily chart. We were overbought, because this is the RSI, this red line right here is the RSI 70, the overbought side, and we did also test the upper Bollinger Bands right here. We were so much overbought, and we were retesting the 200 SMA, that it was obvious to me that there was going to be a slowdown in momentum, because if we have to go to the upside like this, then probably we'll have to experience a lot of drawdown. When you have a structure in the price action that is up and to the right, it arrives a moment when the price is going to be the downside. It's going to get flushed away. It's going to break down all the structure and fall back below where it's sustainable as a price. And that wasn't sustainable for a bear market. It was just a bear market rally, and we are going to see a lot of movements to the downside still and to the upside without this much of a liquidity, because the markets are liquid also, and that's is a thing to take in consideration. We are now just being manipulated by a huge amount of whales and humbugs, people who have millions, billions of dollars that are actually day trading, and we are going to see maybe then if anything's that happening. Okay, but in the shorter term, probably we are going to have a retest. If we are going to the upside, a retest of the 50 SMA, 22.3k, and if we are going to go to the downside again, we have to wait these Bollinger Bands, these low Bollinger Bands, to go lower, because it is a support, and whenever we get out of the Bollinger Bands, we are actually regaining the momentum to re-enter it. Every time we are exiting, we are going into again, and we're waiting for these Bollinger Bands to get higher. As you see right here, we got above, we broke the Bollinger Bands that are these lines right here, and we had to get below to get above again and retested it, and again we got below and up again to retested it. If we have this kind of structure in a bull market, the start of a bull market, these Bollinger Bands were getting upper and upper and upper and upper, and we shouldn't manage to dip as far as here to have these Bollinger Bands gaining momentum, because every time we go down, the Bollinger Bands will stretch to the downside, and every time we get up, the Bollinger Band will stretch to the upside. That's the standard deviation they are formed. Okay, so we'll have to wait for that and to retest this 30 RSI, the oversold level that is right here, and it is also a huge support. The 20k is a huge support, and this area right here is a huge demand zone. In my opinion, there is a lot of liquidity there just waiting to enter the market, and we have seen in this last few months that long-term holders are still here. They are not selling, they are not panicking, and they keep on adding to their holdings. Meanwhile, short-term holders are actually getting out of the market and selling at a loss every and single time we did dip below. So there's nothing more to say here than that. we have just to wait, and we'll probably go and see if we have to retest also the 30 RSI. That is another support we have today. Tomorrow probably will change because we have another week opening, and anyway, the 30 RSI on the weekly chart is also a huge support we have, and today we are still having it at 18.3K. That is also one thing to see, but that is for Bitcoin itself. What with ETH? Well, with ETH, with all the things we had, and we have also still, we are in a position where the FOMO that there is on ETH could lead to many things. So there is a narrative right here where Ethereum, there's some people that are calling for this merge as a buy the rumor, sell the news event. Okay, in my opinion, it will be something like that, but not as they thought it will. We'll have some people that will sell the news and sell the merge event to maybe have the opportunity to re-enter. So I'll try to explain right here what, in my opinion, will happen on the merge. Okay, on the merge date, probably most likely before or after the merge, a huge amount of people, not everybody, if I have to make an absurd percentage out, I will say 20%, 20 to 30% of people will exit the market as the momentum increases to the upside, and another maybe half of them or more, they will re-enter as soon as the price correction will be put in place. And so there's that kind of things happening probably in the near future, but the majority of them, 70%, okay, will stay into the market, will stay into Ethereum, because in the near future, you take this 1, 2, 3, 4 years from now, we are going to see Ethereum being, if everything goes well, I'm not saying that everything will go well or it has to go bad, but if everything goes well, we're going to see Ethereum as a leader in the Web3 sector, and as the new internet become mainstream, this is just one in 1,000 opportunity that we have to have an asset that could lead us to a point where we can have on the Ethereum proof of work that we have right now to the Ethereum proof of stake that we'll have a huge amount of an asset that will gain us in time profit. So we'll have this will kind of be our long-term. I forgot the word, the exact word, but in time we'll have this 5 to 10% reward, and we'll have those into our holdings. So I see this kind of assets that against Bitcoin will be just maybe a retirement for us. Ethereum will be our asset that will make us that much of a profit every month, every year. So this is a huge opportunity for the market, and this Ethereum will be a leader not only on the merge. If everything goes wrong, we'll have also a huge amount of people getting into Ethereum. Meanwhile, they walk to the front end, to the of the protocols, but also to the user interfaces, and to make it real easier to use. Because actually, my granny will not use Ethereum not my mom, I think, and still my brother maybe is 10 years older than me, so it's actually into it. So it's hard even for him to understand how all this wallet thing and strings and blockchain thing work. Okay, so we'll have to make it mainstream. We'll have to work to the user interface side of things. But we are still early. Is that what I would like you to think about? We are still early for Ethereum, and if you are actually taking the opportunity right here to enter, probably it will be well done in the next 10 years, 5 years. If you have those things that you want to buy Ethereum at 600 because the weekly RSI oversold with the Bollinger Bands, the lower Bollinger Bands on the weekly chart is at 600, you'll probably not get there, because with the merge happening, we're not going there. If anything goes wrong, maybe, if everything goes wrong. So the merge is not happening, we'll have a lot of issues with Ethereum, so the price will fall down, and probably people will use the Ethereum Bitcoin here to get to sell Ethereum for Bitcoin. Another things about the Ethereum merge as well is the fact that we had this proof of work chain that will split in half the Ethereum. It's not just like that. It's like a new chain that forks out of the proof of stake, and right now there is Ethereum Classic that is a proof of work version of Ethereum, but I think this new proof of work is obviously just a speculative and something speculative, and just to make money out of it. So people may be entering Ethereum right now also for that kind of shit, and they'll receive this proof of work that they will sell probably into the real leaf on the proof of stake blockchain, or they're going into Bitcoin. So everything that will happen just like this. I don't think the proof of work will survive that, or if it is, it's going to be an Ethereum Classic that will dry up in due time. There's nothing more here to say about the merge itself. The fact is that we'll have 90% less rewards to the block miners, and so we'll have this possibility of deflationary asset if used, because everything we're actually using Ethereum for, it has to be used again and again to make so the AP 1559 is actually working, and so we'll burn more than we actually reward proof of the stakers on the validators on the chain itself, on the Beacon chain. So we'll have to have that, but we're not seeing that much of momentum right now. We are in a bear market. We have a lowering use of the time space of the block space time, and we're not seeing that much of momentum right now. We'll have to see in the next bull market, if everything goes well, how it will react to the new user base that will grow across time. But I think that in the long term, Ethereum will obviously outperform Bitcoin. It already did, because Ethereum is just evolving really fast. I'm not saying we're going to see this flipping happening, because this will not happen. Will not happen probably in years. It all depends on the various legislation and the other things that will go on in the countries that we have in the world, but we are going to see it outperform. We're still at 20% more or less. As you see right here, we have a 20% Ethereum Dominance. That is 20% of the market, okay. And Bitcoin is actually getting lower and lower. And talking about the dominance itself, as you see right here, I already talked about this cyclical behavior it has. As you see, we got up and down, up and down, up and down, moving in cyclical times like 2 months. 2 months. This is the bottom. It is 20 April, and this is the other bottom. Is 20 more or less 12 August. Okay, so we have 2 months to the upside and 2 months to the downside. Okay. And we have seen this happening. We had 2 months to the downside, so I'm still waiting for, and we did retest this trend line right here as a support. I'm still waiting for the bottom to be put in, to be seeing the Bitcoin dominance getting to the upside again. And it will all depends about on the merge itself. If it goes well, we could see that plummeting a little bit more. Because of ETH being FOMO'd in, and so Bitcoin dominance getting down and Ethereum dominance getting up, we still have a kind of unsustainable pattern right here, and these structures will have to get a little bit down before getting higher, probably just retesting some new lines, but as of right now, as I already said, I'm waiting for the Bitcoin dominance to get down, and when will happen that we get above and we'll start to get above, that will be the momentum to the upside that we'll have to watch carefully, because it will probably be the case that we are going to last part of the bear market where Bitcoin is getting pushed up, and everyone is getting into Bitcoin again to push it to the upside, and Bitcoin will outperform the altcoins that will have to stay with it, because if we have this, there are two different options right here. If we have to see the Bitcoin dominance going to the upside, and if we are going to see the Bitcoin dominance getting to the upside, but with Bitcoin falling down below to this 14k level that I talked about, or 15 or 18k or whatever. So in the case we are going to see a Bitcoin dominance getting up with the price falling, that will be destructive. Is going to wreck all the altcoins. Is going to wreck also Ethereum as well. Even if it happens with the merge happening, probably it will sustain itself with this narrative behind. And what we want to see actually is the Bitcoin dominance getting up with the price of Bitcoin itself, because in that case the alts will stay more or less there and will just keep getting a little bit higher. And so when Bitcoin will find its stop, then will be the moment, in my opinion, and what I will do, to enter the alt sector once again, because when we'll have maybe, I don't know, a 30k or 45k, 40k Bitcoin, and a consolidation in that manner, in that space, in that in that price, we'll have these altcoins being pushed higher. Meanwhile, some Bitcoin are entering the altcoins via the pairs, the Bitcoin pairs with the altcoins, and that is what is happening all the time since I started learning about the market. There is Bitcoin, people entering into Bitcoin, there is entering into ETH to outperform Bitcoin, and from ETH to the altcoins, and from the altcoins to Bitcoin again, to have this huge amount of profit being put in Bitcoin. Okay, so I think that will happen. So I'm still waiting to see how it goes, and in that case of a Bitcoin falling with the Bitcoin dominance getting up, in that case I will enter more Bitcoin, more and more Bitcoin, so that when the time comes, I will be able to buy even more alts and more Bitcoin again when the time comes to multiply my Bitcoin. but that is just the technical analysis side of things. Okay, we'll see how it goes. This is my opinion about ETH in the short term anyway. If you're interested in the short term, and that's something that I do daily on the ChainLog school with my daily videos. The shorter term views of the market with Bitcoin, Ethereum, and all the indexes. In the short term, Ethereum could go as low as 1,530. Maybe if we break down below the 50 SMA, that is these green points right here, we could go as low as 1,500. And to the upside, we have still a lot of resistance in the price range that goes 1,773 and 1,700. Okay, there is a lot of resistance. This right here is the 50 RSI, that is the middle RSI, that is doing a support and also resistance, if you don't know it. And we have the 26 EMA, the 26 SMA. These orange points are the SMA, and I don't know if you see that, but this orange line right here is the EMA. Meanwhile, this blue line right here is the 50 RSI. We have the 100D EMA, that is this purple line right here, and we have the middle Bollinger Bands, 1700.6. So you see right here, all of this is a huge resistance area, and we'll have to get above that if we want to keep rallying. I don't think it's the case right now, but we will see, because in the next few weeks, while the merge is approaching, we have 2 weeks, and then we'll see maybe a lot of movement into Ethereum for the merge itself, because 1 week before it will start the FOMO of the people that want to enter this opportunity, and the FOMO is actually an emotion, and people are emotional, so they will actually enter Ethereum for the fear of missing out, the FOMO, and we are going to see a lot of movement there, and we'll have to be careful, because everything could happen, and let's try not to get too greedy on that matters, and trying to get, it's always my opinion that we'll have to, the majority of our portfolio, we have to put it in the long term. If we want to use the shorter term price action to learn about the price action and the markets and the patterns and the MAs and the technical analysis and the on-chain, that's good for us to make some trades, because that's experience, and experience is the best professor, is the best teacher. There's nothing more important than to make experience in the market, because you can search for whatever teacher you want, and they will also be wrong sometime, because the market is a teacher, and also the experience of the failures that we're going through is a teacher. The more you fail, the more you learn. If you are failing and you are not learning, then you are failing, and that's you're just failing, you're not learning, and so you're not going to succeed anymore. You're still going to fail more and more for the same errors, and that's not good for us. It's not good for everyone, for anyone, and we'll have to learn, and the failures are actually our best teachers also. They're going to make us experience and learn about the markets. And what I want you to know is that we'll have to learn. We have to learn with our failures to be better, and I pray, and I'll be happy if you do that. I'll be happy if you're going to be rich, be prosperous. All of that matters. Because I love when people feel happy. I love when people are prosperous and can make other people happy and realize their dreams and make the world a better place with their talents and all of that. I just love that. I don't see why the world can get worse when the people are actually happy and realizing their dreams and getting rich and getting and being wealthier and healthier. I don't see why. I just love that. Okay. But anyway, just going now into on-chain for Bitcoin before entering the macro arguments. But I'm just a little thirsty right now, so taking a little bit here. Okay, I was talking Italian. So, allora, so let's get into the on-chain right now. Let me just see if everything goes good. Okay. So for the on-chain side of things, we are here on aSOPR. This is the adjusted SOPR. Is the adjusted spent output profit ratio that tells us where the market is actually selling their bitcoins, if they are selling at a profit or selling at a loss. Above 1 is the market in the aggregate is selling at a profit. Below 1 is selling at a loss. 1 is the break-even point for the market, so it is the opportunity to exit or re-enter at a break-even point. And as I already pointed out in my analysis right here, maybe it's better if I just show you right here. Whenever we have this pattern of the aSOPR getting above 1 and staying for a lot of time above 1, then we have these bull markets. When we have this pattern of the aSOPR below 1, we have this bear markets momentum where people are exiting the market at a break-even point, and the aSOPR is selling at a loss, and the other players are actually selling at a loss. And when there is the time that we get to the 1 again, we get broke down and use it as a resistance, because it is the opportunity to exit the market, remember, and so we get down below again and still in a loss place. And this is the pattern of the bear market, selling at a loss in the aggregate. Meanwhile, selling at a profit in the aggregate is a pattern of the bull markets. And that's always been right there. It's always been like this. Where we are now, so you'll ask, in the last few months we're selling at a loss, using the 1 as the break-even point as a resistance. And in the last few days, we did retest the 1 again, and we tried to use it as a support, but the momentum wasn't there, it was diminishing, and we broke finally down below with the last flash out that we had on these last few days that we had right here on the 19th of August. If you want to see exactly how much liquidation there was on that day, let's make it into CoinGlass to see it. Let's take Bitcoin. So as you see right here, 19th of August, we had 209 million and more liquidations on the long side. We had a long squeeze so strong that helped us get from 23.2k to the 20.8k. Huge liquidation event. And that led us to a point where, as you see right here, we retested the break-even point at 1, more or less. You see that more or less we are at 1, okay. And we use it as a resistance to get down below again. Still in a bear market price action, in my opinion, in the short to medium term. And we'll have to wait. We'll have to wait more months. We'll have to wait more things developing on the market to see that momentum of a bull market being possible. And we'll see. I'll be there explaining that to you. Another thing I want to talk about is the 1 year plus percentage of supply last active. So as you see right here, every time we get down below and we are flashed away into the others, into the shorter term holding, we were in a bear market, because actually the long-term holders are selling into a strong market more and more until we get to a point where the market can't sustain this amount of sell pressure, and there isn't that much buy pressure to sustain this movement, so we get down again. And so the people Meanwhile, the price goes down, long-term holders are actually reaccumulating again, and even more when we are in the depth of a bear market. So this is the kind of movements that we have every time, and when we are in a bear market and we have a sustained amount of supply being into a bear market, we are seeing this getting down below into a bull market. So where we are now? Now what I'm seeing is something like this, something like getting down below, as you see right here, and regaining momentum. I feel like we are in this place right here where we have reached the bottom area more or less, but we had this flashed out of long-term holders a little bit anyway, because those who purchased right here, seeing this much of a price action, or right here, seeing this much of a flashed out, and also those purchases right here at the top, seeing that much of a flashed out, they're exiting the market to maybe trying to get a lower price. They will be the same that will buy the Bitcoin at 40k, 30k, 50k. So this is not kind of long-term holders conviction people, but just speculators of the market. But we are seeing a lot of long-term holders actually staying strong right here. As you see, we got in the last period a little bit of a flash down right here. Meanwhile, the price was going down, but we had this recover actually. So we had 65% of the supply that has one or plus years that are still active. Okay, and this to me means that we are just seeing a lot of strong conviction, a strong hodling going through the market, even if we are seeing some of those 6 months to 1 year, 2 years being selling at a loss or being flashed out, and we are going to see that in a bit. But another thing I want to talk about is the percent of supply and profit. As you see right here, every time we touch these lower bands below 50, we were in the bottom of a bear market, and every time we got overheated above the 95-98%, we were actually seeing the momentum to the upside being in. This kind of metrics I use most for the bottom side, because as you see, the upper side of things, it gets very overheated, because if you buy right here, and majority of people buying right here, even if we are not to the very top of the market, so even if a local top is not being put in, even if you see yourself that in a time where we have overheated, then we reach that point, so a majority of people are actually in profit. And I'm using this as a confluence indicator to the top side, and as a confluence indicator, and more important, to the downside, where we have these bear markets. And the fact that we didn't, in the last movement, we didn't reach the 50, the exactly below 50, we got 50.2, is because people will purchase the majority of that, and I already talked about that in my YouTube channel. If you want to see it in the study case playlist, supply and profit will it bottom, is because people that were, I'm just making a sort of reassume right here. I try to reassume everything. People who bought right here were still in a place, and let's make taking the chart a little bit extended. People who purchased right here went into the top side, were actually in profit right here, but when we got down below right here, we didn't actually being so much into the profit, because majority of people were buying into the upside and still retaining that price in there. I talked more in depth about that into that video, so I'm not expressing very much well right here. Just to make you know that we didn't actually saw that indicator to bottom, and that's probably not going to happen real soon if we're not going to see the price dip down below 20k once again, probably to the 17-18k where there is the 30 RSI on the weekly chart for Bitcoin. And that's most likely what I will like to talk about, the supply and profit. We're seeing also, and this is just an update, something to update. This is the net unrealized profit and loss. This is taking the profitability of the market and making as to make us see how much of a profitability there is in the market, and unrealized loss and unrealized profit being in. So it's not taking into consideration the realized profit, but the unrealized. So we are seeing that when we are in the overrated territory, we are in the blue zone above 0.8, and when we are oversold, when we are frozen, when the market is is in the bear market, we are seeing this kind of red lines. Okay, and we in the last few days and weeks, we did break down below and get up again into this bear market rally. But what happens was that we fell down again into the capitulation area, and probably we are not seeing and we're still retesting this line right here, that is a resistance zone for the open fear area, and we're probably going to see a little bit of a dip down below before getting higher. This is one indicator that did bottom. So I want to talk also about my personal indicator. I'm not going through the other one. I will be explaining. This is a free indicator chart that I'm using on Glassnode that I developed personally. This is the 200 MU. Is the 200 mean momentum. I called it MU just because it was funnier, and it was as MU. And as you see right here, this practically, let's make it simple, is just taking the 200 SMAs of the monthly and multiple time frames, okay, and with kind of complex algorithm, make it so we are seeing if the price is actually overbought or oversold. And in the case we are back below this line, so the green line you see right here, that I call the 200 mean undervaluation. We are undervalued in comparison to the 200 SMAs relative to the historical price action of Bitcoin. Meanwhile, when we are above this red line right here, that I call the 200 mean overvaluation zone, we are overvalued as a whole for the Bitcoin price history in comparison to the 200 SMAs, okay, and DMAs. As you see right here, when we got here, it was more or less the 14th of June, and I saw this dip down below very fast to a point where it was the first time we got so below here. And in this case, I saw the price getting a little bit higher into the bear market rally, but we are still in a place where we are in the depth of a bear market. As you see right here, still in a bear market. As you see right here, when we got down below, still in a bear market, and we have a huge and far way to get to the top until we have this bear market rally. I didn't expect that to move a little bit higher above this green line, and in fact we are still down below in the bear market zone. We're not seeing that much of a confluence for a bull market to start and again. So let's get into the other waves a little bit. I'm just concentrating today and focusing more onto the Bitcoin side of things and to the on-chain data, even if we are going to talk also about economic global economy in the end of the video of the live stream, because there's a lot of things to talk about, and to the on-chain side of things also in the majority. As you see right here, we did see the 6 month to 1 year getting let's see, shrinking a little bit. That's because they are actually aging into the 1 to 2 years age bands right here. So hodlers that are actually hodling, that were actually hodling from the upside, they're still hodling, and they're becoming 1 to 2 years holders. And the ones that we saw a little bit shrinking, becoming more or less a little bit less and less prosperous on the market as a wallet size, relative in a percentage relative to the market cap, are the 2 to 3 years and the 3 to 4 years holders. They're a little bit of a shrinking without really actually aging, because as you see right here, the 4 year to 8 year are actually more or less the same still for all the bear market and the bull market we had, more or less still the same. Meanwhile, these were shrinking, and they were the kind of holders actually that were selling into the market weakness. And probably these kind of holders were protocols, were something like the Luna Foundation guards, something like Free Arrows Capital. They are VCs that are being just over leveraged and they get flushed out of the market. Okay, people that are in the market since a long time now, and they're getting out because of over leverage, because of mismanagement of their holdings, and something like that is not really something we could say it is bearish for the market itself. It's something that we have to take as it is. And one thing that I noticed since now is that 8 year to infinity, so the others that are more than 8 years, are actually keep on being more and more and more and more. So we have come to a point where 18.5% of the whole Bitcoin supply is actually held by 8 years and more holders, and that is keep growing, and will keep growing probably until the end of the Bitcoin minting supply in 2140. Okay, and we'll keep growing like this, and we could probably reach a point where we have like 25 or 30% of the supply that is illiquid, that is lost or is in wallet that is not being spent since a lot of years, and that will keep growing. Meanwhile, the balance in exchanges are actually getting lower, so the momentum is there for the next 10 years, 20 years to get Bitcoin to a price level of 100k to 1 million, and no, not 100 million, 1 million or 2 millions even. It all depends by the liquidity of the market, because if the market is illiquid and there are bidders but there are not sellers, then the price will go up extensively without the need of the market cap itself as an amount of money. They will go up for speculation and for the liquidity of the market. That's what I'm going on and seeing. Another thing that I'm seeing is that short-term holders are actually at levels where we reached in the depth of the bear market. So probably we are in the area, as I already said, and still the same idea that we are in the area of capitulation, the area where we are going to bottom. And that's exactly what I'm seeing right now. This red, orange lines are short-term holders, holders that are actually holding coins less than 5 months, and they're actually in the same spot that we were in the depth of all bear markets. Obviously, you have to make it so this is a different bear market, it's a different cycle, okay, but we are still in the same zone more or less for the short-term holders. And every time we fell down below with a strong and convinced downturn, we were going to get a little bit of an uptrend into the near future. And I'm waiting for this kind of all-link to flash out, getting us a little bit of space for long-term holders to enter to a price where they feel like it's going to be good for them, and in that case, so that we can push higher. The maximum pain for short-term holders is the maximum relief for the long-term holders. My neck is actually really stretchy. So, what we're going to see is that, and I want to talk about MVRV also. MVRV crosses, actually. This is the difference between the long-term holders MVRV, the market value to realized value, and the short-term holders in red right here, MVRV. What is the MVRV? MVRV is actually just the difference between the market cap and the realized cap, and I have a course on on-chain analysis if you want to know more about that. It's just the difference between the actual price, for example, of Bitcoin or its market cap, with the realized price of Bitcoin or its realized cap, or the actual the current how can I say it, the current value, the real value of the market where it was purchased by the market participants themselves. So this difference in these two metrics, so MVRV of one and the others, where the MVRV values are actually the amount of times, the multiple of time, the excess of unrealized profit that is being into the market, or realized profit that is being sold into the market. As you see right here, when we reach, for example, let's make an example, long-term holders we're actually seeing a 10x realized profit when we touch the first all-time high back in 2021, and you see 10 is the value, and that's exactly what it is. So when we fall back below 1 in the MVRV for all the cohorts, we are actually seeing in the aggregate the realized value, so the cost at where they purchased, being below the actual aggregate market cap, okay, the aggregate value of the asset. And that means that we are in a zone of unprofitability for this kind of cohort. And we are seeing that breaking down when we had this 3-month bottom when Tesla got out, and we got this flushed out last year. But we are also broke through this year just when we broke down from the all-time high for the short-term holders, the last all-time high. And we are seeing the long-term holders using this break-even point of profitability as a support right now to get a little bit higher. But as you see in this chart right here, every time the long-term holders MVRV is getting below the short-term holders MVRV, that was a bottom put in. We were in the depth of the bear market, and we were going to get higher in the near future. And every time it was the case. Every time was the case. And I'm waiting for that to happen. If we have to see that confluence, I'll use this indicator as well to see if we are in a spot where we are oversold so much and we are ready to get up and into a new bull market. And we are not there yet, so we're still in a bear market. That's it. There's nothing more to say. I'll try to be a little bit fast right here in the next few charts, just because it will be only a hyper nerd and on-chain analytics. Only one like me can just make it through like 1 or 2, 3 hours of on-chain charts and being happy. So really fast, active addresses, active users are actually getting higher by a 70 EMA. So in a mean of 7 days, we are actually seeing a user base that keeps growing for Bitcoin. Even if more people are not actually saying that, I see it on chain, and this is data, is not you cannot argument with data, is just what it is. We are seeing more users on the network since the last bear market, and we are still seeing that. There's nothing more to say. So good for the long term, new user base that is growing slowly but slowly, and we'll see in the next few years, just to make you know. So another thing is whale accumulation Heatmap. We're seeing actually in the near past that we didn't see a lot of accumulation by whales, and that means that there's not that much of interest at these price zones right here, and we'll have to wait. And we did in fact had some huge accumulation in the area of 19, and I'm waiting for a red dot to be plotted out maybe into the area of 19k to or 20k to 14k to assess this and to use this as a confluence metric with the others, as I always do. Another thing that you should care about is the short-term holders realized price that is keep getting lowered. Is at 26.4k today, and it is as you see right here, it is used as a support in every bull market, as a resistance in all bear market, and we used it as a support before a bull market. So we're still below that, we are still in a bear market, and we are seeing that the price action every time we reach or we come close to it is getting down again. And this is just a bear market price action. I don't see a lot of movements there. So still 1, 2, 3, 4 months from here, we'll see if we have the confluence necessary to get into a bull market. We are not there yet. We are not there yet. As a support right here, as you see, the long-term holders realized price. Long-term holder realized price that did manage to make as a support. And it still does. 20.4k, we did more or less reach that. We reached 20.7 and more or less there anyway. There's nothing more than that. But as you see, this is a huge support that we are using ever since the bear market. Every bear market we did break below, it was a good time to buy, and we're still there. So why not making a long-term investment right now for the next 10 years? Why not? Or next 4 years or 8 years? We know that every 3 or 4 years we have a bear market like this, and we fell below here, and every time we get multiple to the upside. It's not a financial advice, and will never be, but in my opinion, it's a good time to buy, and will be more and more good to buy in this zone right here, 20 to 14k. That's only my opinion anyway. So into realized price distribution, and that's something that I was calling before, I don't see a lot of realized profit being realized actually. So we are not seeing profitability in the market. We are seeing unprofitability. In fact, we're seeing a lot when this was the majority of this was just short-term holders, but also we have seen a lot of sharks and whales, and we are going to see that losing their money here and their bitcoins, and they see a lot of realized loss instead. That is a behavior of a bear market. And in the last few days, we did, in fact, had this huge losses, huge in the manner of the mean that we have in the last few days. That is a little bit so below that. Anyway, was actually a huge event for example. The liquidation we already saw, and it's not huge in absolute terms, okay, because this is huge, this is really huge, but we are still seeing a huge losses in comparison to the profit, as you see right here. profit are not being put in. There is only realized loss. Even if we are seeing a slowdown in realized loss, we are not ready until we have an uptrend into realized profit. We are not ready to see a bull market. We are seeing just still more losses than profits, and the profitability of the market, as we already seen, is down and to the right. So there's nothing more there. As you see, the only realized profit that we had was more or less just from handbags and from whales, that are these purple and green, strong green colors. And the same goes for the losses, where there are also shark, that is this light green. But as you see right here, we got a huge amount of losses being realized when the price was getting higher, because the whales, the handbags, were trying to exiting at a break-even point, or just a little bit below, before the market was flashing out again. They're actually manipulating the price, putting in these resistance zones. And on chain, this is clean, and I see that happening. And we are not still there into a point where we can actually say that we are in a profitability zone. We are seeing a lot of movement from whales still, and from handbags. So whenever it is that they are realizing loss, there's something that goes wrong into the market, and I'm not going to be put my foot into a bull market case when there isn't any single metric that is pointing in that way. Let's make here, for example, you see that handbags, this is the balance of the handbags that are 10k or more bitcoins, that have 10k or more bitcoins. As you see right here, they are actually more or less going sideways, getting flushed away from the last top. They exited the market, and they became whales. They actually became whales. More people became. They are not very much. They are like 100, 1k, depends. These are 100 to 1k participants. There are people that has billions, and seeing that kind of momentum to the downside from the whales that are actually becoming handbags, as you see right here, is something that, in my opinion, is bullish for the long term, because that means that whales are actually accumulating so much bitcoins that at the end they are becoming handbags. And if they are handbags, that means that they believe into the asset, or in the performance of the asset in the near future, or in the long-term future. It all depends on what we're going to see into these metrics, data. The data is what I'm trying to looking at, and I see that. It's just the data that show us the way. It's nothing else. It's not bias. It's not anything. It's just data. I love data. And sharks are actually getting flushed away since the top, but those are more or less only protocols and something like that, as I already said. They are those over leveraged and long-term holder, the high net worth investors that are over leveraged, and we're not seeing a lot of accumulation by them. We are very not seeing the very base that we have in huge accumulation are plankton like shrimps. As you see right here, this is the number of Bitcoin they have, crabs, and also fish. In the last few weeks, since the last downturn, watch how much of we are coming to the same spot where we were back into the last all-time high, more or less, before the huge drawdown. And the fish hodling hodlers seems to know what they are doing, because they're actually following my same scheme, more or less. I did the same. I waited and waited until I got to this point right here, and then I started selling to the downside, and I sold more or less all that I have in speculation, short to medium term right here. and I waited until we got right here to get a little bit more, and then I just waited again and got a little bit more here and here, and started to get a lot of bitcoins right here, in the aggregate, and it seems like they are actually at the same, they are at an high right here that is like 8-month high, 7-month high. I'm following this kind of hodlers more and more in the last few days and in the last few weeks, than just the stream scraps that they are actually just keep buying, and the buying pressure will actually in the near future overwhelm the sell pressure, and this is the bull case, and that's why the Bitcoin is actually a good asset to buy, because there is a user base that keeps growing and growing, and keeps accumulating and accumulating no matter what, even if they have just 0.1 or 1 or 10 Bitcoin, they are actually keeping on accumulating them, and that's great for the market price action in the long term. And then watching the fish as much as they watch humpbacks and whales, because they are actually really good at timing the market, or anyway at getting to a point where they see right here they started really selling when the price of Bitcoin was at 20k, and they started selling into the top until they reached the very low levels before the crash, where they kept a little bit selling, but the majority was selling into the strength, and they keep accumulating into the weakness, and in this case right here probably they just got a little bit FOMO'd in, but I'm trying to balance their behavior with the whales and humpbacks, because they're actually really good at timing the market most of the time, and I'm seeing that accumulating Bitcoin. I was kind of I was also watching the Bitcoin Days Destroyed bands, 90 DMA, in this case to the 7 DMA. This is I don't know if you know Bitcoin Days Destroyed, in this case Coin Days Destroyed metrics. I talked about that also. All these metrics I talked about on my Onchain course on ChainLog. I have a technical analysis course and obviously a fundamental analysis course as well. But as you see right here, if you want to know more, I'm there. As you see right here, we had the majority of this movement on the Bitcoin Days Destroyed. That means I have to explain you. The coin days destroyed are actually the coin days that are being destroyed when you move your coins. If you buy Bitcoin 1 year, if you buy Bitcoin in 2021 and you sell it in 2022 in 365 days, you were accumulating 365 days. When you're selling your Bitcoin, 365 days are being destroyed, and they are actually being put in this chart. So we watch closely the Bitcoin Days Destroyed to see if there is a long-term holders behavior that most, because obviously long-term holders have more coin days of accumulating them, since you can think about 8 years, 100 Bitcoins being held for 8 years. For example, I have a lot of coin days to be destroyed if they sell into the market, and that's kind of why we are watching them, because they can actually say if we are seeing a lot of long-term holders that are selling their coins, and what the long-term holders do is meaningful, because obviously they are actually those that are hodling. They have conviction in the asset. If they fell and they stop having that conviction into the asset, and they start selling into maybe a bottom, that's something that goes wrong, and we have to address that. They usually, as you see right here anyway, most likely, and we see a lot of coin days being destroyed when the market is going up, because majority of people, long-term holders, short-term holders, everybody are just selling into strength. And there is also a user base and growing user base that actually destroying Bitcoin coin days. And we're not seeing that. We are seeing that there is a steady sideline and momentum where we are in a bear market, and there isn't so much of Bitcoin days destroyed. We are not seeing the spikes. We are seeing quiet moving to the sideline. As you see right here, it's ever growing. The very bottom is ever growing because the supply here was lower. It was like 3 million Bitcoin, 4 million, 5 million Bitcoin. So there was a very low supply, and meanwhile we grow, we have more supply. So even in a bear market, we have a lot more coin days destroyed. But we are seeing this bottom being put in, and we're still there. We are still seeing the bear market price action and not seeing that much of a momentum to the upside. What I would like to do to make you know anyway is that most likely every Bitcoin days destroyed is coming from humpbacks and whales and sharks, as you see right here. You see yourself that every time we had some coin days being destroyed, there are humpbacks, they are whales, and they are sharks. They are those kind of people that are actually moving the market right now. There's not being, for example, fish, like in this case, that are having a lot of Bitcoin days being destroyed. And in the last few days, there are still whales and humpbacks. It's ever been like that and will ever be. And if we want to get into the aSOL, average spent output lifespan, this is for the UTXO. It's not really weighting the amount of coins, it's just weighting the amount of UTXOs, and the difference is obviously UTXO is like a bill, and a coin is the number on the bill, and the difference from UTXO and I will have to explain it to you just in my course if you want to, because I'm going to be very verbose right here otherwise. Anyway, we're not seeing that much of a momentum to the upside, and this was just this right here that we are seeing this peak was because there was that food for the exchanges being not able to repay their debts, and so the majority of retailers went out and put that money into safe storage, and this was just the UTXO. This was not the number of coins. If we want to have a weighted amount of coins, we get to the dormancy supply adjusted, that is a lifespan of the average lifespan of a coin from the time it was purchased, when this UTXO was created, to the moment where it was sold and destroyed in that case. And we are seeing that dormancy supply adjusted, and this is supply adjusted because it's actually getting into it's addressing the problem of the supply being minted, the ever-growing supply being minted, to have this lower band still there. Not going into the details as I just said. We are seeing that this Bitcoin is a derivative of the Bitcoin Days Destroyed, of the Coin Days Destroyed metrics, and we see right here that we are seeing a lot of movement to the downside, and still a never slow down of in these metrics. So we're not seeing a lot of long-term holder sellings, and there are being more and more short-term holder sellings, and even there are less and less short-term holders on the market, and we are not seeing that much of a speculation. That's just like it. Okay. So this is most likely what I had to say about Onchain and the fact that we are still in a bear market, and we'll stay right here for, I don't know, month. Everybody was going to talk about a bull case, a bull market. I don't like the bull market arguments right now. We are still in a bear market, and that's my opinion. and I'll get you through all of the things I say actually. So the XY is still strong for the macro environment, and that's obviously because of the fact that all major, let's say, bank is raising interest rate, but they are not raising interest rate as much as the Fed did. And the Fed actually raised the interest more and more. Meanwhile, for example, the year that weight to the DXY, that is an index for 57% of the index, went down. So if the year went down and weights 57%, obviously the DXY get up faster and faster. Why the year got down from the heights of 1.20 that we were right here last year? That's because of the fact that they didn't raise interest rate. They didn't did much. They raised like 50 bps in the last few days, from like right here in July. We got the 50 bps, but they also did this TPI, transmission protection instrument, that is actually a yield curve control instrument for the weaker bond of the nations in the eurozone, where they are trying to make to take the yield coming from the yield coming from the good one, like the BTP Bund, the Bund, the German bonds and bonds, to buy the weaker one, like the Italian ones. And if it isn't enough to make so the spread between the two isn't going to be greater than 250 bps, then they'll have to print money to buy this riskier Italian, for example, bonds, and doing so they are actually selling their currency for the bonds. And that's why this is weaker, and that's the same reason why the JPY that weighs like 12 to 14%, more or less, I don't remember exactly well, but more or less there, into the DXY is doing the same. It's doing the same, and into the bonds right here, for example, they have a yield curve control policy on 10-year bonds of 0.25%. And as you see, every time the yield on the 10-year bonds is reaching higher, they're actually selling the JPY to buy back in. But they are actually their currency is actually weaker for the dollar. And when the dollar is stronger than the other ones, then every one of the other currencies is weaker than the dollar, then the dollar is actually strong, and if the dollar is strong, then the equities and the indexes are getting weaker. And when we are in a recession, and there is recession fears, and the Fed is trying to addressing demand to resolve the supply side of things that are getting weaker. The thing is that lowering demand for the commodities, for example, is getting the price down, obviously, because inflation is just what happened right here when we had more demand than supply, and we had all that much of inflation coming from money printers. So commodities are getting down for the recession fears and the fact that the demand is lowering. Gold is actually getting we got this rally right here for the recession fears, but still it's getting down below because we are not seeing that much of pivot from the Fed, and in general currencies are getting strong against the gold itself. That is an inflation hedge, or it will have to be. It's not an inflation hedge. It's the majority of stocks and indexes and charts and assets and everything you ever watch is just protection against the debasement of the currencies, is not more inflation hedge than X. X are inflation hedge, but that's just because their intrinsic values, and the asset right here, the gold is. We had this pump, for example. If we compare it to Bitcoin, we had this pump right here, and you see, we got a little bit of a pump, and still Bitcoin just didn't get to the same point it did gold. Even if gold is more manipulated, and we can go into that, but it's more manipulated. There is a case on BlackRock and some other huge companies that's actually manipulating the gold market since years now. But you see, Bitcoin didn't manage to get to this amount of heights, and to the bottom side of things, as you see right here, gold is doing more or less the same movement of Bitcoin, even if it is a $1 trillion market, $10 trillion markets, or was anyway, and that's what I'm seeing. If we have to go into the economy, nothing really changed. Into the macro talks right here, we have this public debt on the U.S. that is getting greater and greater, and we have the total public debt as a percentage of domestic product that is still at 124%. That means that the public debt is 1.2x more than 1.25x more than the GDP every year, and we are still growing. Even if we did manage to get a little bit back below, we got to 136%. We got now at 124, but still we are seeing a lot of public debt that we can't address without taxes. And if we see right here, for example, this is the cost of capital, yearly debt cost in billions of this debt. Just to serving this debt, we have in billions 511 billions every year. Right now, with the Fed raising interest rates just to serve this debt in the United States, and they're not going to be it's not going to be easy, because let's get you into a little bit more. As you see right here, we have yearly cost of capital as a percentage of the GDP. So every year as a percentage, that was in billions, this was in billions, and this was as a percentage. And as a percentage, as you see, this is 2% of the whole GDP is just used to serve the amount of debt. You see, well, 2% is not that much. We can manage to do that, yes, if we are taking GDP, that is the total production. But let's get for example your taxes, the taxes in the U.S. Taxes in the U.S. As a percentage of the yearly cost, as a percentage of the taxes, is 18%. So every year, like if we are going to see a little bit more of interest rates, we can go also at 20%, for example, or 22%. The trend is declining because the percentage in debt is even if it's lower, it's actually greater in terms of billions, because the debt is increasing. We can maybe arrive at 20%, and every year 20%. That means that every $100, 20%, so $20 that you gave to the state, to the U.S. is actually taking and give it to the Fed just to serve the debt. It's not going anywhere. It's just this is money that that will disappear. That it's just serving a debt. It's not diminishing the debt. So if you want to diminish the debt, you have to get to 40%, for example, of the taxes, to get so the debt will decrease in time. And this is not possible, because we've all that we are seeing with the COVID, with the state that is using their money to help people out. We're not saying that, and there is a lot of things that we can address right here, like helping people out is not getting better the situation because it's raising demand, and with these supplies that's getting worse the inflation, but not doing so is a moral dilemma. And there is a lot of things to talk about, but in the data things, in the data driven things that we can talk about, this isn't going to be great for the US and for the other states, for anybody. Let's see right here, we're still this is just the liabilities, the total liabilities. That means that every single liabilities of the consumer, the citizen, is actually being here. It's still at the very top. It's still at the very top. And even if we take this total liabilities, the yearly cost of liabilities to the overall debt is still an all-time high. It's still the all-time high. We are in a situation where the market, the economy, isn't going to get any way, and this in any way to the upside is not growing. It will not grow, and we'll have to face a recession before the thing will have to get worse before it will get better, if they get better, because we're seeing that, for example, right here we have credit cards and other revolving plans. For the consumer loans, we are increasing over time since the 2000s, and it's still increasing. We are still addressing the problems of the cost of living with loans, with other debts, and for the average consumer that means poverty, and will be worse for people getting richer. The rich people will benefit from this because they'll loan out a lot more with a lot more of interest. They'll get more assets, but poor people will get poorer. That's how it is and will always been. We are not ready. We are not in the position, as you see right here in the 2020 in the COVID that was going down, because we addressed this with printed money, but this just made it worse at the very end. What can I say? That's exactly what will happen every time. I'm not going into the TED right now, nor into the tax receipt. As you see, that's how much the federal government is taxing people in billions. And as I already said, we did get to 18 right here. The trend is far below the yearly cost of capital, the yearly cost of serving the debt as a percentage of the taxes. But if you take the taxes itself, they are in an ever increasing trend. They will get higher. So an 18% of this is an 18% of this, but an 18% of this is really more higher. Is higher. Sorry, is more higher. Is higher, obviously. And there isn't much we can say. We are just saying that. Still, the producer price index is getting higher and still decreasing a little bit, because obviously can get higher and higher, but it's still in an ever increasing zone since the 2020 COVID crash. GDP, the real GDP is increasing, but the GDP itself, but if we take the real GDP, is actually decreasing, and this is not addressing. Let's say that the way it is measured is not really getting out of the way the inflation we are facing, or the average citizen is facing, because they are facing more or less a 20%. The CPI is getting 8.5%. They are facing a flexible goods CPI probably at 20%, with the first calculations of the CPI with the flexible goods and into the way with a raising cost of of energy and food and everything else. So this is most likely what I'm saying, and I'm saying that the iGuild also corporate bonds into this bear market rally has been sold at the very least. So we are saying that, and so this is still a thing about the bear market being in still. There isn't much more to say here. We could argue that the surveys about the business optimism index are getting lower. The sentiment of consumers in the University of Michigan consumer sentiment survey is actually getting lower at levels we haven't seen since never seen, and they are actually concerned about inflation, about the rising cost of goods, of electricity, of capital, and everything else. It's not going great. It's not going great, and it will never be until we face the fact that we have to hit a recession and the things are getting worse before getting better. That is, we are not going to see the Fed pivot in an instant, putting like 50 coming down, like, and said we have raised interest rates since something like a natural rate that is not natural in any case, because you can say that 2.5% Fed funds is actually a natural rate when you have an 8.5 CPI print. It's just not neutral. It's in every stretch of the imagination, it is not neutral. Okay, it's more we can say neutral in terms of their money printing medium size of inflation that's going to be like 2 to 3%, but that's not neutral in the last money printed and raising cost of goods and with the supply chain issues we have. Will never be. They have to raise interest rate even more, and they will have to, or they will have just to wait out the year-over-year to come lower, because in 10 years, if they are not going to do anything in 10 years, that will just flatten, because obviously year over year the inflation, if today is 10%, 1 year from now it will be less if nothing changed into the inflation levels. We are not going to have more supply chain issues. We are not going to have more printed money. It's going to decrease naturally, okay? But to address that in the next 1 to 2 years before the elections, they'll have to raise interest rate maybe 50 BPS next time in September, maybe 75 BPS. It all depends from the next sprint we have. And they're going to maybe making a 75, another 75, or another 50, and then another 50, or another 25, and then another 25, or just staying there waiting to see if something changes, if they broke something, because now they are actually at a point, as you see, as we already said, so now that if the cost of serving this debt is increasing and the public debt is increasing, there's going to be a lot of problems for the majority of people with the total liabilities that we've seen, and also for the governments to repay these debts. They have to raise taxes, and taxes raised on the average citizens is going to worsen the problem of inflation, even if because you see, if you have a lot of taxes and you can manage to pay, then you'll have to taking more debt to repay these taxes, and at the very end all your assets are going to be flushed out. and you are going to be poorer, and something else is going to be richer, and the government itself cannot afford to make so a lesser percentage of their citizens is able to repay taxes, so they are going to get more help out with more printed money, 12 people that will raise demand, and in contemporary we'll have this inflation going on with the printed money that will raise the cost of capital with the public debt. This is a spiral, a death spiral that is going on if we're not addressing the problem right now, and they are actually addressing it. So we are not seeing the Fed pivot in real time, in a matter of seconds, in a matter of days. We have seen the Fed pivot in the past. Historically, the data suggests that we have still 1 year maybe in front of us of this recessionary environment, where the Fed will have to change the course of things slowly but slowly, and their politics from hawkish to dovish, slowly but slowly with the data. There's nothing more to see or say right here. That's always and what will always be. So this is most likely it for today, guys and girls. I don't have really much more to say right here. If you will have any question, I'm really here to help you out, understand the markets, and I'll try today to get the best out of what I know to make so you understand where we are actually and currently. If you have any doubt, I'll try to be there for you, trying to help you out, because I think that helping others is one of the things we are born for, and if we have any talents, that we have to put it out there and make so this helps out more people. So if you have any question, I'm still here, and I'll be really appreciate you if you will suggest to your friends my school. I have the ChainLog YouTube channel, but I have a ChainLog site where you can find my ChainLog school, where there is a course on it's still very undervalued in my opinion, very cheap. I have a course on Onchain analysis, one on technical analysis, one on fundamental analysis, and I have this huge library with all the things of the market that with articles, VCs, reports, everything that could change your mind or making you having an edge in the market. All about blockchain, and I have this aggregator of news. I have talking chat with me if you want any advice or help. I'm not giving out financial advice. I'm just giving my opinion to you and help you out with your problems. Not managing your funds, and will never not shilling shit in my in my ChainLog school. I'll try just to help you out and making you understand the things that are changing in the market. Another fact is that we have the tools you need. I have a list of tools that you need to have an edge on the market. So there's a really huge amount of tools also. Anyway, I will appreciate really much if you just advise my school so that I can help out more people, become more prosperous, and make the world a better place. Just having this in my mind for a long way now. I don't really need that, but I want to, because I feel like helping people out is the best way to live, and I've been prosperous enough to say that putting in my money to open this this company, the second company, because I have another one, and the other one is doing great. So making my money here and helping others, serving others, making me even prosperous, helping others becoming even prosperous is the best way to do things, in my opinion, in my life. So we very appreciate that. If you like the video, like, comment, subscribe, do whatever you need to make so I can make ChainLog and anyway help the majority of people out. This is ChainLog analyst here, and that greets you. Cheers. We'll see you next time in 2-3 weeks. Okay? Cheers. I'm out now. Let's close.